Hello, from LPL Financial, welcome to The Talking Point. I'm your host, Quincy Krosby.
Good morning, everyone. It's Quincy Krosby. This is Monday morning. It is November 7th, and it is The Talking Point. Thank you for joining me. I really appreciate it. This is going to be a really interesting week. Obviously, we have the elections. We may not know exactly the winners, but nonetheless, I'll get to that at the very end. But this week we will have a parade of Fed speakers, every single day, Fed speakers. Obviously, everyone wants to hear their opinions on what happened at the Fed meeting. And this is extremely interesting, I think, for the markets. You may have seen that when the statement came out last week, that the equity market was higher. And then, during the press conference, the market sold off. What happened? Well, what happened was Chairman Powell was basically saying, look, we are not going to abandon raising rates until we believe that price stability is in reach. And remember, there was a question about, aren't you worried about the effect on financial conditions tightening too much, concerns over the global economy, with the U.S. dollar so strong because the Fed is, aggressive. And his answer was interesting. He said, look, yeah, it does matter, but at the end of the day, he said, you have to have an economy that is based on price stability. And that has been what he's been saying all along. The other thing is, he did not say, by the way, that the Fed is going to keep raising rates at 75 basis points or an aggressive rate hike campaign. I think the market sees that the Fed, taking the cumulative effects of all of the rate hikes, I think you're up to, including last week, 375 basis points together. And then, December 14th, we will have another meeting. That with the lagged effects of rate hikes, it takes months and months before, you see it creeping into all parts of the economy. That what the Fed could do is transition to lower rates, but keep it up until they are convinced that they have beaten inflation. This isn't a science, and that's where I think so many people think that this is, a formula. No, it isn't. As you know, central banks make mistakes. The Fed has made mistakes. But nonetheless, it looks as if, unless the inflation readings going into the December 14th meeting are high, and there's no way out, they may do another 75 basis points. But right now, the Fed funds futures market is still looking at 50 basis points for December. Now, needless to say, this week we will have important inflation data. But again, let's just, understand that he is not wavering. And we also have quantitative tightening ramping up. And that is the unwinding of the Fed's large balance sheet. Remember, they bought trillions of dollars of treasury bonds, they bought mortgage-backed securities, and now they want to unwind it, and it's ramping up. That also is a form of tightening. So, and that one, there's nothing specific in the research about, how much it equates to in basis points, but we know, obviously, you have quantitative easing, you have quantitative tightening. In any event, today's market is up in terms of the futures market, that is. The expectations right now are that the Republicans can take both houses. Now, many of the races are extremely tight. And as they say, even a day in politics, can change everything. So we don't want to go out there and say that's what it is. But the fact of the matter is, we may have gridlock. And keep in mind, the market doesn't mind gridlock at all. Just remember that. That is to say that the Democrats have one house and the Republicans have another house. So that's something that, obviously we're going to deal with. But in any case, that's the big event. But in terms of economic data releases, it is the CPI, the Consumer Price Index, coming out. The expectations are that we will see, in terms of the headline number, coming down a bit from the last reading and even year over year. So just coming down a bit, that will be good for the market. Obviously it will, because you don't want it climbing higher. Absolutely not. But, you know, the fact is that when we look at the concerns from the Fed regarding rents represent a disproportionate amount of the consumer price index. What we'll see is rents are coming down. It will take a while before it shows up empirically in the CPI, but it will start to show up, particularly new leases. That's obviously where landlords are worried that, you know, folks are getting nervous. They know that people are going to room with their parents again. Parents are rooming with their kids now. Folks are saying, look, we're not going to pay these rents. But it is the existing rents that, you know, still are very high. But it will start showing up in the reports, and that's going to make a big difference, but it does take time. So again, the CPI is an extremely important event this week, besides the election, which is very, very important. Also, remember, Fed speakers out every single day. So we know that there is a debate or discussion within the Fed regarding, you know, a pause, regarding a slowdown. He made it very clear they don't want to pause, but again, he did allude to the fact that the Fed could downshift a bit. In other words, going from 75 to 50. We will watch to see after the CPI comes out where the Fed funds futures market is, and does it move up to 75 basis points. There are those who believe that because the labor market remains strong, that the Fed may have to actually do another 75 basis points. Because remember, you don't want to see those wages climb higher because they are just passed along, hopefully, by, if you are an owner, an employer, passed along to the end customer. And last week's report actually showed that wages are inching higher again. So this is, you know, difficult. And they always say in economics that the labor market is actually the last to start falling. No one's expecting it to fall and collapse and crater. The unemployment rate did move up to 3.7%. But, you know, you could argue that that was because we didn't have as many people coming in and looking for jobs. Tomorrow, and you know, you've heard me say this, the National Federation of Independent Businesses, the NFIB, coming out with their report. I watch that very closely. Small business owners in our country, the backbone of our country, we want to see what are their concerns. We know that inflation was difficult for them. We know that the supply chain challenges were. We want to hear what they have to say because really it resonates, and usually you can see what they're talking about, what their concerns are. Basically is a picture of concerns for the overall economy. So that comes out tomorrow. And then, as I said, Thursday is the Consumer Price Index report. The other report this week that we will be watching, as will the Fed be watching, is on Friday. There'll be a flash report from the University of Michigan. That's their consumer sentiment report. But what we look for is the consumer 5-year expectations. That was up to 2.9%. You know, we don't want it climbing higher. When gasoline prices were very high, you may remember it moved above 3%. And that was something that caused the Fed, along with a higher CPI report, to go from 50 basis points to 75 at their meeting. They do not want consumers seeing inflation climbing higher over a 5-year period because it becomes what they call anchored. It becomes very difficult to then break that psychology of higher inflation. So that report is going to be examined by the market and obviously by the Federal Reserve. So overall, this week, it is truly about the election. And one of the analysts has come out with a note basically saying what the market has been saying, that if it is a clean sweep by the Republicans, that is to say they take both houses, that the equity market will rally, But we will also see a rally in the Treasury market, which means, by the way, that the yields come down. That's a rally. The yields don't go up, the yields come down. And if the yields come down, as we know, it is good for the equity market. So that's, a theme that you'll see if you're going online and looking at this. Truth be told, I'll have to pay very close attention. I'm not sure we're going to know who won, on the election eve. It's probably going to take a bit longer. Also want to point out something in China, because it is important, Apple. Reports came out over the weekend that China is in a really big lockdown right now. COVID cases are sort of zooming through the country. And as you know, they follow zero COVID. In other words, they locked down the country. However, for Apple, the factory that manufactures Apple iPhones, Foxconn, they are under reduced opening. So they are affected. And therefore, reports have come out that Apple is going to see about 3 million fewer iPhone 14s this year. Demand softer, obviously, in China as people are locked down. And it's essentially a major supply problem. This weekend, there was a meeting of the officials talking about COVID and lockdowns. You know, there's been an awful lot of rumors and chatter that they were going to basically open the country by March. They shot that down and said, no way, they're not going to do it. However, and this is important because it would have a major effect on commodities, a major effect on oil as a commodity, meaning it would climb higher, if the market believed that China is going to open. I mean, their economic data are very, very weak. They are looking at utilizing the technology that was used for Moderna, right? You know, the Moderna vaccine that's been used in the U.S., and also Pfizer. They are perhaps going to utilize it and then use it throughout the country. It's important because they've been using their own vaccine, and many of the older people don't want it. They've got to have people vaccinated there because otherwise you're going to continue to have these lockdowns. So if the market sees that they're going to come up with a vaccine where they use this Western biotechnology expertise that's already been used in vaccines, it will probably not 100%, lead to basically a push in terms of the expectations for the Chinese economy, which the numbers keep coming down. So I just want to point that out. Chinese officials have come out and used the term, no, they are not giving up zero COVID policy. No, they're not going to do it. But, again, things do change, and that's what the market is looking for. But it affected Apple, as I said, in pre-market overnight, and even early this morning, Apple shares were down based on that report coming out regarding the factory in China that manufactures, I don't know if it's all of their iPhone 14s, but within China, it's their main manufacturer. So have a very good week. Take good care, and never hesitate to get in touch with me if you have any questions at all. Happy to answer, happy to get in touch and discuss. See you next week.
This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and are subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer, member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.